The last month or so, the market has been very choppy and making traders pay the price for mistakes. This week, I've started entering the market and I've also experienced some choppiness, some issues, but primarily some wins. I want to be covering in this episode some of the key moments of my trading week. We're going to be covering my wins, my mistakes, the traps I've fallen for, and what I'm looking for next week, with complete transparency, sharing screens, sharing my trades with you guys here on YouTube. Okay, the first cover though is I want to do a quick market recap of what happened last week, where we are, and why I've started positioning myself in stocks, crypto, and a few other trades I've taken, such as metals. Okay, so this is my S&P 500 chart. As you can see, there was a nice bounce on this lower channel level. We've broken up now, and we are showing some key momentum. I'll just move to the 1 daily chart. The 4 hourly isn't very useful here. We've had previous highs here, previous lows being retested, and now we're looking like we're going all the way up to 7K in the markets. And this is the reason why I started entering some trades when the market pivoted and moved long. Okay, very selective here. The key is picking the right stocks that are showing relative strength and momentum that will outperform the S&P 500. You're going to notice in my portfolio performance for this week that early in the week I didn't beat the market because I wasn't scaled in enough. But later on in the week, as I scaled into more positions and better picks, and I was seeing the fruits of my previous positioning, I started outperforming the market on Thursday and on Wednesday and Friday. Thursday was a bank holiday in the US. It was Thanksgiving. So that's essentially what happened here. We've seen a nice bounce and move up. Similar situation here with the Russell. The Russell's showing some strength initially and looking very strong on the bounce here. Might find some resistance, and I'm looking for that potential intraday short here. But at the moment, we're looking quite strong. Gold saw an increase. We had gold recovering and moving up higher. I ended up taking the trade on the Sunday for this breakout, and I traded it all the way up to 4.1, and then I didn't manage to get in again on that trade. It was an intraday trade, very good, but the market's moving now all the way up, potentially to 4.3 and higher, creating new highs, with silver also seeing an increase here. So let's go to the silver chart. You're going to see that silver was also now creating new all-time highs. What I've done though is I've positioned myself in some precious metals stocks. I'll explain to you guys and then run through which ones I've bought, and I expect them to do pretty well. I missed out on this silver play by not playing some other opportunities that I had on my radar, and some of the guys in the Discord group had on their radar. I didn't take those trades, but you can't get into every single industry. You're not going to get into every single opportunity. All you can do is position yourself as best as you can. The dollar, what is the dollar doing? Let's go to the dollar. It's dipping, okay, and it's at a key pivotal point here where we could easily break down, move all the way down to 98, and that would see us moving and grinding up to that 7K level, potentially going in crypto to around 100K for Bitcoin, and around 7K or all-time highs again with the S&P 500, if that happens with the dollar, in my opinion. Similar situation with the 10-year US 10Y, where we saw a drop in yields, increasing the desire for risk on assets, but very risky. I covered this in the daily hunt. and my daily show, where I give you guys technical analysis and an overview of what the market's going to do that day and some new opportunities. As you can see here, we're on the verge of creating a inverted head and shoulder where we can go back up and move higher. I'll draw this out for you guys so you can see a little bit clearer when I think it's this one here. Inverted head and shoulder. There you go. We go here, there, back up here. And for us to really break out of this head and shoulder, we would have to see this neckline broken. But yeah, we can bounce around this level, and we did bounce around this right shoulder level here now. And that is a little bit risky for the markets moving into next week. So we have to be cautious with our decision making. Now, Bitcoin and crypto, what's happened with crypto? It's had a recovery. This is a mean reversion play. We're looking after the overextension on the sell side. We are now looking at the mean reversion all the way up to around 98, maybe 101K. Those are the kind of zones I'm looking at the moment. You could say this previous support being tested as a resistance before we potentially come back down and make a decision. I think the decision making or the decision in the market will be made around this 90 to around 95 level. Even if we go to 100K, I think it dips back down and we make a decision there and we decide which side the market goes for the next leg. So that's the overall market. Now I want to go into my P&L. I want to go into my performance for the week. And I think it's important that we cover what I've done for the week, stage by stage, so that you guys can see that we are operating here with complete transparency. There is no need for me to exaggerate anything. So this week I've closed with 2.38% profit. It doesn't sound like a lot, but in a week, it's a decent amount, because if we can times that by 50, we've made over 100%. Now, I'm not very excited by that performance. The main reason being that I haven't outperformed the S&P 500. I don't tend to outperform the S&P 500 until we see some further momentum kicking in and a trend developing in the overall market. So what tends to happen is I outperform it when the market's selling off by being out of the market, and I outperform it when there's a clear trend. Again, this is the reason why I've called my community trend hunters. A clear trend and momentum developing where I can ride these stocks that are showing relative strength compared to the S&P or the NASDAQ. So as you can see here, last week, I haven't outperformed these indexes, mainly because of Monday, where we saw a huge move back up, move the market higher, and we saw 1.5% gains on the S&P 500, 2.6% gains on the NASDAQ, and that was the key shift where we found support. Now, I don't enter on those first initial signs in the market. I wait for further confirmation. So as you can see, as the weeks move in further, I outperform, or I perform on par with the S&P and NASDAQ. As you can see here, I outperformed on the Wednesday because I held certain stocks, and the indexes didn't move on the Friday after the Thanksgiving holiday. I outperformed it, and hopefully, if we can get that trend developing, I should outperform over the course of a 2 to 3, 4 week period, depending on how long we can hold this, and if this has further momentum on trend. So nothing extraordinary, but when you extrapolate this and you go 2.3%, well, I can make 100% if I can maintain this kind of growth. What I want to cover here now is moving on from my performance. I want to cover my top picks and what I've traded and why I've traded it. I think the next thing to cover here is what did I do right and what did I do wrong this week. Okay, then we're going to go into the trade of the week. Right. So, what did I do right this week? I'd say I held through with some of my, which was one of my only trade was CHCT. I held through with this one, even though it was showing some signs of weakness, and it's looking pretty decent. It's a more defensive play because it's a real estate investment trust. It has a dividend. It also has a dividend, so I felt okay holding it for a little bit longer as long as it maintains a clear. I'm in the profit. I'm in profit rather than in a loss. I held through with this one. What else I did was I positioned myself in Intel, and I bought up on the Tuesday and the Wednesday before Thanksgiving because I was seeing clear signs here of the momentum shift. I ended up buying Intel. I bought Amazon and a few other stocks in my intraday account, but we're talking here mainly about my swing trading. I ended up buying a precious metal company, shares in WPM. We ended up buying GEV just in case there's that rotation back into healthcare. So it's a more defensive, but also growth because we're seeing that growth come in as well with GEV. I bought Starbucks, again, growth coming in the broader market. So we're riding that. But then if we go into defensive really quickly with a sell-off, Starbucks should do pretty well. Retail's moving pretty well. And I think this has set up quite nicely here for a break up above. I did a quite tight stop loss on BKR, trading this around the level of around this level here. So on this breakout zone of 49 with a tight stop loss with idea of if this goes back up to all-time highs, we can make a 1 to 4. And then I bought a few other companies like eToro, which I felt were going to do well because of this key shift here. As you can see, there was this point here. Now, what I did wrong, and I think this is from the previous weeks, is I didn't hold through with some of these bigger plays or better plays like Goodyear Tires and American Eagle Outfitters. So I ended up buying these on this shift from bearish to bullish around this zone of 7.5. We went higher, came back down. Instead of holding through around this dip or even rebuying here, I missed out on these gains. And these are the bigger gains because if I'm looking at where I positioned myself and I bought around this level, I think it was approximately here, and we had a stop loss around this level here. I think it was this one. We are now sitting at I think this is the opposite way. We are now sitting, I think, at 1 to 2 risk reward, if I'm not mistaken. Yeah, 1 to 2. So I've missed out on about 2% gain here just by not holding Goodyear Tires. I risk around 1%, sometimes 0.5% per trade, but I'm missing out on 1 to 2% gain in my overall portfolio just because of this. And I would have been able to gain most of that during this week and the latter part of last week. Also, I didn't hold American Eagle. I should have held that through as well. So again, a mistake there by selling a bit too early. American Eagle has completely been flying since my entry point, which was around this level here. And if you can see here, this is currently around a 1 to 2 as well. Missed out on around 2% gain of a portfolio. So I've made 2.3. I'm happy with that. But if I've refined or if I was a little bit more careful with my decision making on that dip during this 11 to 20th of November dip that we saw in the markets, and held through, I would have now gained an additional 4%. So these are slight mistakes, But overall, I'm happy with the fact that I'm still profitable. I'm still positioning myself in the right trades, and we're still gaining from the positions that we're making and the decisions that we're making. Now, my best trade of the week, we move on to the segment now. The best trade of the week is Intel. I've really liked Intel on the setup here. There's some other factors as to why it moved, but the key reason why I ended up buying this one was, and I think I have to do something really quickly here. The reason why Intel is one of the best trades of the week is just this it's really strong move on the Friday. We had, sorry, that was a drawing tool. We had some news event here, rose 10% to about this amount. May ship 15 to 20 million Apple M series of processors annually by mid 2027. Now, I wasn't expecting this to happen, but I'm positioning myself in this, seeing the early momentum, seeing the move, and I'm not seeing it in the rest of the industry. I'm not seeing it in Nvidia. I'll show you Nvidia isn't really set up properly yet, and we had this continuation plays. So not only are we seeing Intel shares being bought by the government, but now we have Apple setting up an agreement to buy 15 to 20 million M series. Okay, so this was a key point where I entered. It was around this zone here. I felt confident here that this was going to move higher for other reasons and factors that I've shared in my Discord group. And we're currently sitting on a 1 to 2.4. Okay. The only mistake here is I end up buying just 0.5%. I end up only risking 0.5% with Intel and most of my positions because I don't want to. I want to diversify, and then I'll scale in a little bit more aggressively when I feel comfortable with the market moving higher and the broader market showing strength. I am worried about bonds. I'm worried about the dollar. I'm worried about this being a fake out. So I usually am a bit more cautious with my buying. This was a perfect pivot and a shift with my strategy. I could have done a little bit better by entering a little bit sooner with these lower time frames. But again, no regrets here. Completely happy with my entry and the gains I'm seeing. And yeah, it's moving well, and I think we're looking pretty good for the move to around 44, in my opinion, maybe even higher, and building structure here for that continuation play. So as you can see here on the weekly, looks fantastic for the continuation play to around 46, maybe even higher. On the monthly, looks also quite good on the bounce here, but might find some resistance around the 43, maybe 44 zone. So we have to monitor that zone as well. Okay. So yeah, looking overall pretty good. It's just a matter of whether I think I might add to this one rather than I might hold this a little bit more long term if I can, and if it doesn't show weakness, with the idea of maybe seeing this to around the 50s and 60s in the next 3 to 4 months. That's the number one trade. How I've managed it. I haven't sold any of it, so I haven't really done anything to it other than buy. I think most of these I haven't done anything other than buy and ride the trend, and see the gains coming in for those initial days. I'm hoping next week we can see some further upside momentum, no dips and strength, and then that would mean that I can move my stop losses to around break even. But I will update you guys at the end of next week as well. Now, mistake of the week is gold. So fantastic buy with gold. I end up buying it around the 4.07 level. I'll show you the buy zone on the 1 hourly chart. I end up buying it right here as it pivoted back up on the 1 hourly. Show you quickly right here. Okay. I end up raising my stop loss quite early. I could have held through, maybe been a little bit more lenient with stop loss and not be so tight. So I end up tightening my stop loss around this zone here, thinking that we're getting a rejection on the trend line on the daily, as well as some other factors. There's another reason why this was going to be rejected here temporarily, and it was. But we end up seeing a consolidation, and the only real mistake. So the first mistake is tightening the stop loss a bit too much. But let's say I did that and I made a 1 to 2.3 risk reward ratio on this one. I should have kept my eyes on the trade to be able to trade it again around this key pivot point. And the key pivot point, in my opinion, was right here on the breakout, with an even better risk reward ratio, where I could have made right now a 1 to 4 around this level. I think it would have been better, a 1 to 4 on this move. And even the fake out or the dip that happened during the Friday morning session wouldn't have phased me. I would have still stayed here, because my original zone on this was 4.2. So I would have made another 5R on this trade, or I could have kept it and made 4R. Okay. So if I reinvested the profits and I tightened my stop loss, I would have made another 5R on this one. Only mistake I would say is this one, or let's say the biggest mistake was not re-entering this trade. But other than that, I feel like it was a fairly comfortable week, and pretty decent for the markets, and I've gained a decent amount. 2.3% isn't bad for the week. Market setups for next week. I haven't got any yet, but I do like to relook at my previous trade. So if we go here, I think Nvidia can do quite well if the broader market moves well. We'll just see here how the setup is forming. So Nvidia, I think after this dip, after monitor this, I'll be looking for the breakout on the trend line. So approximately, I'd say around this level. Let me just add one here. Yeah, I'll just look around this level here for that breakup again, and then we'll monitor it. Another one that I liked was, I think I was looking at INQ. I haven't done my weekly screens, so I'm not really. ARAI, I think was quite nice. Big Bear AI as well. So look at these. Yeah, ARAI, very, very nice. So look, I traded the initial move here. This initial move here. We've come back down for a double bottom here. This is an IPO. So, sorry, not an IPO. It's beaten down. So we have a huge opportunity here to trade this one for a big a nice risk reward ratio. So we have, look, we have this descending trend line. We can draw it around this level here as well. Let's give it a little bit more like that, something like that. It's mostly a zone. I think people mistake trend lines for like it being perfect. I try and do zones. So if you capture the zone here, something like this, you can even include this one here as well. This is the zone that it tests, and it's tested like maybe 12 times. Broken that zone, I'm looking for that a break above. The break above could be a key pivot point once I get my full strategy confirmation for a trade with a nice tight stop loss back up to this level, and it could be a 1 to 10 for me here. I'd probably say this is probably a better stop loss zone. Would lower the risk reward ratio. Just depends on how aggressive I feel on this one, but this would be quite nice. A 1 to 10 here. US is 0.5%, and you can make you can make 5% on this for your portfolio. And then obviously if it trends significantly more, if it trends a lot more, then you can really gain on this one. So this is a fantastic setup. It was a fantastic setup here as well when we traded it a few weeks ago in early October. I end up selling for somewhere around this level, and then here for 1 to 2. It's quite nice, and then we dip back down, and we're building another structure for that breakup. I'll leave it with that. I'm going to leave it with that. With crypto, there are some nice little setups here, but they're not really setting up as well as they should. So I don't really have any ideas where I think, yeah, I can give this on YouTube and my viewers will be able to gain from this. Right, so if you want to stay ahead of the markets and you want to make some smart decisions instead of being reactive, make sure you subscribe to this channel. I focus on being a hunter, focus on being very, very careful with what I buy, a good stock picker, and I share with you guys in the daily show, the daily hunt, every day, new ideas, my thoughts on the markets. So make sure you subscribe, make sure you like and comment in below, and also go and join the Discord group where you're going to get my market conditions analysis in detail, macro analysis, my watch list every day, 5, 6, 10 stocks I have on my watch list every day. These are handpicked by me, not just a scanner, and plenty of free ideas on how to profit from the markets.